everybody. Hopefully y'all are having a great Friday so far. It looks like my audio is working based on my OBS, but I just want to check because we've got a little bit of a different setup here currently at my parents' place. So press 1 in the chat if you can hear me, and we'll get started with our trading today. Good morning, Kevin. Good morning, Guile. Good morning, Tims. Glad to see you here, Tims. Thank you, Eric. Thank you for being here, Eric. All right, so let's head on over. Oh, great. I got to type in my password. Fun. Probably should have done that. Let me cut my display so we don't show off my password. Let's see. Safari. So far, pretty flat day after inflation came out. But let's see. Let me actually pull up the chart, see how we're trading versus when the inflation report came out. Thank you.
I am but a servant.
All right. Let's see. Okay. All right. Now I'm logged into good old TD trade, and I'm actually looking to switch over to E-Trade, so might be using their platform a little bit more soon. Just back on. Sweet. So we head on over. Currently, please be aware, day trading buying power will be turned off for the day. In Tesla, that's an interesting. What's going on with Tesla and why can't we day trade it? Oh, it's down another percent after yesterday. It's 10% fall. Yesterday, still carrying through with my dollar cost average play. Quick little SPY analysis for this morning. So if we look at the 2-day 5-minute chart since 8:30 a.m. when the inflation report came out, we fell, we recovered, and then fell back, and now we're recovering. So a lot of price action, but not really getting anywhere. And I think based on what my analysis, inflation is certainly coming down, right? So if you look at all the readings, and I posted this over in the premium Discord in the morning update that I'm supposed to be giving every morning, but I haven't been over the last few days because I've been super busy moving my family in. But SPY is flat this morning, 0.0%. The core PCE month over month reading was 0.2%. So that means month over month inflation is still going up. Prices are still going up across the board. This was expected at 0.2, so not a real shocker there. And this is down from going up 0.3% the month prior to it. So the month prior, prices went up by 0.3%. This month, it only went up 0.2. So inflation is slowing down, but we still have inflation going on. So prices are still going up, which is not what we want. We want, disinflationary pressures to get rid of, in order to get rid of inflation and bring it down to that 2% target that the Fed wants. But the year-over-year reading for regular PCE, that includes energy and food prices, was 5.5%. And if you compare that to last month, it was 6.1%. So pretty decent drop in the inflation reading there. The month over month reading was positive 0.1%, so very marginally up. That's almost a 0% reading, which would have been good, but we didn't get that exactly. And this is down from positive 0.4% last month for the month over month reading for regular PCE. And finally, core PCE came in at positive 4.7% year over year. 4.7 is exactly what was expected. And this is down from 5.0% last month. So, overall, inflation is slowing down, but it is still positive. and it's still well above what the Fed wants it at 2%. So that's 4.7 over 2. That is still 2.35 times higher than what the Fed wants inflation to be, which means that they need more restrictive fiscal policy. And we talked about this a little bit yesterday, but we're not really going to feel the effects of the interest rate hikes until March of next year, because people don't typically refinance as soon as the Fed raises interest rates. People put off purchases until it's necessary. So once people start to, buy new cars next year or refinance their home, whatever. Actually, probably wouldn't refinance their home, but maybe buy a new home because they want to upgrade. Then you're going to see that taking effect versus now, you're not going to see it as much. But I wouldn't be surprised if we sold off more, given my assumption that we need more fiscal restrictive policy to bring down inflation to where we're seeing disinflation. But, the markets so far haven't really reacted much to it. Yeah, it looks like we already sold off. Great. So while I'm doing my morning analysis, I don't get to open my trade. Gotta love it. I think we'll stay below 381 if I had to guess. So I'm going to open a credit spread, assuming that we're going to stay below 381. And I'm going to do it on my phone and post it to the premium Discord. You can scroll to the top of the chat to sign up for the premium Discord. And then you can also just join the free Discord, which is pinned in the chat. But yeah, my assumption, we're probably going to stay below 381, which was the high on the first candle of the day. So I'm going to set my expiration date for today. It's going to be a day trade, obviously. And I'm going to do a 381 call credit spread. And the credit for this is actually pretty good. I'm digging the credit for this. But I want to maybe close if we go back above 380.4. Since the credit is so good, we could actually go with a higher strike price if our assumption is that we close at 380.4. We're not very far away from that at all. So we could go another strike price higher, say it'll be below 382. I would definitely be more comfortable in that, but obviously you're going to get less credit the higher you go with the credit spread. So if I said that it would be below 382, there's actually a 382.50 strike price, interesting enough, but the credit for that is about 30% lower. So the risk reward ratio gets screwed up. So I'm just going to do the 381 since we're dropping right now. Friday is usually not my best performing day because the markets are always so volatile on Fridays. But considering that, I'm probably going to put down less risk on this trade accordingly. Let's see. I would probably put down like 600 total risk. So I'm going to get paid like $270 in credit for this. So very small trade, according to my account size. But I think it's a decent opportunity for this morning. So I just opened that. Hopefully I took the right screenshots. Doing it on mobile is a little bit different than my usual, but all right. So that one's already up a little bit, but I'm going to post that to the Discord. Again, over in the premium chats. New options alert. Just opened a new SPY call credit spread. That one expires today. It's a day trade, 12/23. Got 27 each. 380. Okay. Sweet. Yeah, and it's already dropped into that 378 level. So getting back up to that 380.4 levels, becoming increasingly less likely. What are words? How do I put that in a better way? I hope y'all know what I mean, because I don't know how to put that in a different way. Rookie here, ready to learn from failure. Let's go. Yeah. I mean, you're going to have failures along the way. Like last week, or the week before, I lost a crap ton of money on just a couple of trades. And my lesson from those couple of trades was that I was putting a way too much size. So, and I also learned that Fridays are usually my worst days. So usually on Fridays I reduce my size because Fridays are always going to be more volatile because you have more trading volume typically, and also because there's more options that are expiring. So when you have more options expiring, the market makers or the people that are selling the options to the people that are buying them have to hedge those positions by either buying shares or selling hundreds of shares. That way, if they end up getting assigned, then they can cover that assignment. So, Tesla giving me battery day vibes. Honestly. That reminds me of when I lost $12,000. Thank you, MC, for that. A day that I don't want to remember, but a very, very important day where I learned about risk management and not throwing all of my money into a single trade. Always diversify your account. That's what I'll say on that. But let's see, we got UVixie trading at 734. I want to buy. Actually, let me see if I already bought it or not. Okay. So the Nike trades I'm down on. The call credit spreads that I just opened, currently down on. The FedEx trade down on. Jesus Christ, FedEx is still just ripping my face off right now. 1.5% up this morning, while SPY is trading flat to down. That's just insane at this point. Ugh. Makes me less confident in my price target at 167.5, but I don't know, man. That's just wild. I did want to look into some purchases of Fulgent Genetics to see if my dollar cost average plan already went through or not. Let's see my history. Fulgent Genetics recurring investment. Yeah, so yesterday I ended up buying $100 worth of Fulgent Genetics. So now I have a total of 128 shares of this company at an average cost of $49.31. So this is a genetic testing company. And the reason why I invest in them versus the big names like Invitae, PacBio, is because they have positive cash flow, whereas the other companies are burning money like drunk sailors. The CFOs for this company don't know how to manage a balance sheet to save their life. So that's why I ended up choosing Fulgent Genetics, because their CFO is somewhat reasonable. And they're making a lot of strategic investments. And not to say that the investments at PacBio and Invitae aren't strategic or worthwhile, but it's just they don't know how to make their business actually profitable. So I would rather invest in a profitable company that has a large cash pile, which PacBio and Invitae just don't foot that bill. So let's check out SPY. Looks like we tried to hit that 380.4 mark, but ended up getting rejected by it. Jesus Christ. There we go. Yeah, so we might have bounced off of 378.3. Not really sure why the markets chose that price to come off of, but let's see. Definitely wasn't based on the 2-day chart. Maybe if we go back to not even this. Yeah, I don't know where they got 387.3 to bounce off of. Maybe the lows from back here. That's the closest point that I can find from 1219. But it is a very choppy market, to say the least, looking at these last 1, 2, 3, 4, 5 trading days. It's just been a very, very choppy week, and this just shows why I don't use super long expiration dates. This is why you'll see me mostly just trading like daily options or like weekly options, because it's very hard to tell over 2 or 3 days, just because things are just changing so quickly in this market. It's ridiculous. Do I do any crypto trading? One of the projects actually doing big is Bomb Money. They're launching a DeFi mobile app that looks like a game changer. I haven't heard of that one. The only crypto that I own right now, just because it's the only that I've done any bit of research on, is Dogecoin. Funnily enough, obviously it's like a very small investment. Bitcoin, much larger, and then Ethereum is my largest holding for crypto. I believe in the crypto space and a world currency, because the dollar and like central banks have been screwing us over for so long, and I think that we need to have like a revolution for the monetary system. So that's why I love crypto, being able to exchange across countries without having to pay extreme fees like the traditional finance space pay or charges. Although the gas fees on Ethereum, I don't know what the gas fees are like now after they did the proof of stake, but I know when it was under proof of work, the gas fees on Ethereum were outrageous. Yeah, Bitcoin, Doge, Sheeb, Algo, LRC, and Polygon. Polygon has a cheaper fee. Yeah, Ethereum's fees are very, very high. But yeah, I do believe in the crypto space. I do think that it's gonna take a while to make that shift away from the central banks, just because this has been the system for so long. Getting away from that system is going to take a longer time. But anyway, enough on my crypto tangent. Currently SPY is down 0.5%, so it looks like it's going to continue its way down the charts. Kind of finding a balance so far in the first 20 minutes, but down. Maybe if it goes below 378.40, we'll get some more downside, but haven't reached that quite yet, so we'll see how this all plays out this morning. What else we got going on? The VIX is up again today, 2.3%. UVIXI itself is up 0.7%. I was looking to buy some UVIXI calls yesterday, which would have done beautifully, because at one point UVIXI was up like 10%. So it went from an open price of 688 to 783, and I want to buy like a 2-3 month call for UVIXI, and I've covered this yesterday too, but VIX has these cycles that last about 3 months apiece, and they usually end up peaking between weeks like 5 through 8. I do think that the peak for this one's going to be later in the cycle, probably like week 7, week 8. But I do think that it's going to go well above the average, which has been 25.85, which I marked right here. Over the last year, that's been the average price. Let me actually get rid of all the other price levels. I feel like my chart is just too much. But yeah, 25.5 is the mark that I'm looking for, which is up another 10% from where VIX is trading right now, which should translate to 15% for UVIXI, since it's 1.5 leverage, but it doesn't always. But yeah, we definitely caught a bounce for volatility And I thought volatility would be coming down today, interesting enough. So that's what the title of this live stream was. Volatility flops after the PCE report comes out, because the PCE was basically the same as the expectations. So I would have thought, given that, that volatility would crush today. But turns out that volatility is actually headed a little bit higher. But I mean, compared to yesterday, this volatility is nothing. Like yesterday, at one point, we were down like 2.7, 2.8%. Like SPY was given all hell. Let's see what Apple is up to. I know Tesla fell a crap ton. Now Apple is down to 130. I was watching CNBC the other day, and they were talking about how like Apple has yet to crack or whatever. But this is down from 180. So this is down, how much? 182.94 was the peak. God dang it. No, I don't want a text note. I want to do a line, please. 182.94. And we'll do a line. God dang it, not a price level. Come on. Down to currently 130.22. I'll call it 130.44, I guess, but we'll hover over this. So this is down 28.7%. So people that are saying that Apple has yet to fall obviously don't remember this stock being at $182 at one point. And like even just a couple months ago, we were back at like 177. It was ridiculous. And I was freaking banging my head against the freaking keyboard saying that like this is outrageous that it's trading at 170 near the all-time high, when it was almost for certain that interest rates were going to go higher, the growth of the company is going to slow down, and the likelihood of a recession just keeps on increasing. But it still made its way up to $175, which I think is absolutely ridiculous. But do a line, okay? No, not that kind of line. It might sound like it with the sniffles that I have, but no. Blockchain is the future. Yeah. Definitely early in the game for crypto. This technology has only been around for 10 years at this point, so it's not, super proven or whatever. And there's also a lot of contention around cryptocurrency and, people saying, oh, it's just used for drug money, when the US dollar is literally used for the same thing. Like, I don't know if y'all have ever bought drugs before. Not saying that I have. But usually whenever you pay for drugs, you pay in paper dollars. I've never bought drugs using crypto, but I was also not part of the Silk Road. So kind of wish that I was part of the Silk Road, because then I would be a lot richer than I am now, but it is what it is. Anyway, heading on over to Apple, currently trading at 130. SPY is trading below 379. Down 0.5% today, so really not moving much yet so far this morning. We do have, oh crap, I forgot about that. We do have the Michigan report coming out in about 6 minutes, which is my favorite report. Markets don't really care about it so much. Markets don't really care about what I think at all, obviously, with my account down on like pretty much all of my trades. With Nike, FedEx, Fulgent, that one's an old one, the gold call. But this Bank of America put's actually starting to make a little bit of money. I like that. Bank of America's trading at 32.20. I mean, if we go into a recession next year, I think banks have a lot more to fall. What the hell is this? Why? There we go. I think banks have a lot more to fall. We go into a recession next year. I honestly think that this recession could be worse than 2008, and it might take a while for this to play out. Like, it might take like 2-3 years for this to play out, but I'm fairly certain, just given the policy before '08. We had 7 years of quantitative easing after 9/11, which led to a bunch of homes being bought. Same thing happened from 2011 to 2021, right? So that was 10-year time frame versus a 7-year time frame. And we had this we had things put in place to where it wasn't supposed to be super risky. But the thing about it is, we had no income, no job loans. Banks were giving out loans to foreigners, and they were very predatory back in '07, before the housing collapse. But we just figured out a different way to scheme everybody. And the way that they did it was they had the FHA loan, where you can take out 3.5% down on a home and get like 30 times leverage, which I think is absolutely ridiculous. Nobody should be able to get 30 times leverage. Nobody should be able to get 30 times leverage on like a $200,000 investment. I think that's absolutely insane. Like, say your house ends up dropping, I'll do the math here. So say you buy a $200,000 house, you put 3.5% down. So that means that you're investing, is that 200,000 or is that 2 million? That's 200,000. That means that you're only putting $7,000 down for this home. So let's say that, you bought it at the peak, and now homes are down like 10%, right? So now that home that you paid $7,000 for, that you only put $7,000 for, is down by $20,000. So that means that you're negative. You have negative equity on that loan now of 20,000 minus 3.5, or sorry, 7.5, or 7. That means you have negative $13,000 of equity in that home. So I don't think that things really got any better since the '08 crisis. I think they just figured out a different way to scheme people, in all honesty. Looks like my stream is being a bit slow. Let me try to refresh maybe. There we go. Sorry about that. My stream is being a little bit slow with the internet here. But let's check out the SPY. So we ended up breaking that 378.3 level, currently trading at it, but we headed down to 378. Oh, Jesus Christ. The internet is not very fast here at all. I don't think I'll be streaming from here again. But yeah, we're trading at 378.3. We touched 378 but didn't end up breaking through it. So we'll see if we actually do break through 378 or not. That would definitely be a pretty bearish move for the day. But it kind of seems like we're bouncing off of it. So the Michigan report's about to come out in about 1 minute. So let's head on over to investing.com. Go to the economic calendar. Oops. Oh my gosh. Oh man. This is just awful. There we go. All right. So let's refresh the page. We still got 1 minute left, I guess. So we'll wait on it just a tad more. Just check out the Discord. Oh, looks like we're bouncing already on this report, which is why I wanted to get out before, but let's see what it actually came out to. 370. Yep, we're headed higher. About to hit that 380.4 mark, but hopefully I can read the report before I get the alert. All right. So this is the Michigan Economic Report. 5-year inflation expectations has yet to come out. Consumer sentiment was higher than expected. So that's what consumers currently feel, how they currently feel about the economy. Current conditions came out to 59.4 versus 60.2. So a drop in current conditions, an increase in consumer sentiment. Inflation expectations has yet to come out. And what else is there? I thought there was another reading. Maybe sentiment is a year out. I thought it was current, but oh, future economic. Okay, relative level of current and future economic conditions. So people are thinking that the economy is going to improve based on the Michigan report. Let me refresh the page to see if we can get inflation expectations. Hopefully, 2.9%. So 5-year inflation expectations actually came in lower than it did in the previous report at 3%. So that's a good sign. That is a positive. And we had the 1-year inflation expectations also coming down to 4.4 versus 4.6. This is still different from what the Fed expects, is what's interesting about this. If we go over to the FOMC calendar, FOMC meeting calendar. And scroll down to December, we can see what the Fed expects, and then we can compare that to what the average person expects. So the core PCE reading is expected at 3.5% at the end of next year, and the PCE inflation is expected at 3.1%. Whereas the consumer, or the average Joe, thinks that inflation is going to be more sticky at 4.4 versus what the Fed wants it at 3.5 to 3.1. So let's see, even at their highest rating, that is 4.4 over 3.5, that is still 25% higher than what the Fed has set their expectations to, which is not a good thing. Inflation can be kind of a self-fulfilling prophecy. If people expect prices to be higher in the future, they're more likely to buy now, which adds to inflation pressures. So it's not exactly great that the average person thinks that inflation is going to be worse than what the Fed expects it to be. You want the consumer to think that prices are going to come down in the future. That way they'll save their money instead. That way they can buy things at a cheaper price later on. It's the psychology of inflation. But really, inflation is just driven by supply and demand. The supply of goods and the supply of money, which one is higher? If the supply of money is more than the supply of goods, then prices will go up. If the supply of goods increases to meet the supply of money, then inflation will start to slow down. And finally, if the supply of goods outpaces the supply of money, then you start to get deflation. But let's see. SPY is just kind of trading flat on this. So maybe we do a put credit spread on top of the call credit spread. That would that might be a pretty smart idea. So this will turn into an iron condor, basically. I'd probably say that it'll stay above 3. 377, 376. And I'll be using the same collateral that I used for the call credit spread, which is nice. So I get double the credit and turn this into an iron condor. And I'm assuming, again, we'll probably stay above 377. If I want to be safe, I'll call it 376, depending on how much credit that they're giving out for that. The 376 is actually paying pretty decent, a lot more than I would have expected. So let's see. I'll just open the same amount of spreads as I open for the call credit spreads. So 10 put credit spreads, assuming that will be above 376, and 10 call credit spreads, assuming that will be below 381. Just opened a new SPY put credit spread. That one expires today. 12/23 at 18, I think. Yeah. Gotta get the strike prices. So 376. Okay. All right. So now basically I turn that into an iron condor, and I would say if we go below probably this support level that it had gained right around here, I'll call it just 377 just for easy price levels. So if we go below 377, then I'll close out of that. Close PCS is what I'll call it. All right. So now we got an iron condor going on today. Should be interesting given that it's a Friday. It's probably going to be pretty active trading day. But let's see. Thoughts on NNDM, $1.2 billion in cash, 600 million market cap. Average price target of 10, trading at 242. Now, price targets I don't really care for, because people base their price targets on like ideal scenarios that typically don't end up playing out. Like the odds of your scenario playing out is very low, but any person's scenario, not just like your own. But NNDM, let's see. Nano Dimensions, I've heard of the company. Let's go over to their investor relations page. Get rid of this right quick. So I like to go to their SEC filings. Their last 10Q, so a quarterly report, if we can find it, hopefully. I think we can. Quarterly filings, yeah. Wait, why do they not have any quarterly filings? Current reports? 6Ks. That's annoying. Okay, let's go to the SEC website, I guess. NNDM. When was their latest quarterly report? Why is it not on here at all? That's very weird. Okay, I guess I'll just go to their investor relations page and pull it from there. NNDM investor relations. Events and presentations. Past events. Special meeting, conference call. General meeting, conference call, investor. What? Okay, let's go to financial info. Okay, here's the quarterly reports. This is a very weird way to put a quarterly report, but let's read through their latest statement of financial position. So, yeah, like you said, a lot of cash and assets, $1.4 billion in cash and assets, $1.1 billion, or, oh, wait a minute. As of September 30th, they have 370 mil cash, but a total of 1.05 mil in cash and assets, where a lot of it is from bank deposits. Cash and cash equivalents drained from 1.1 to 370. So that's kind of concerning. Let's check out revenues is $10 million a year. And you said this is a, how much, what's the market cap of this company? $600 million company that's making $10 million a quarter. So assuming zero growth, which is, I don't know how likely that is, that's 40 a year with a $600 million market cap. That's a 15 price to sales ratio, which is a little bit lower than SPY. It is a small cap company, so sometimes small cap companies can garner more in terms of price to sales. But let's see. I'll look through their cash flow statement. That's probably the most important thing to look at is their cash flows, especially in this market. So let's see what their beginning of quarter and end of quarter was. So cash at the beginning of the quarter was, oh, this is a 9-month period. Okay. So the cash at the beginning of the 9 months was 853, and the cash at the end of the last 9 months has been 370. And then just quarter to quarter, they started with 700 million, and now they're at 370. So they spent half their cash pile in a single quarter, which is just like outrageous. Like that's just fiscally irresponsible. It's the best way that I can put it. Spending half of your cash pile in a single quarter while cash is getting harder to come by due to less spending in the economy, due to interest rates going up. It's not a good look for NNDM. Let's check their stock price. NNDM. And it's trading at $2.42, so close to being a penny stock. But let's see. Obviously, over the last year, a couple years, they did really well, like every other company did. Went all the way up to 16. Now they're trading at 242. They've been trading in a range between like $3 and $2 for a very long time. So maybe based on technical analysis, they hold $2 or so. But if they run out of cash, which it seems like they'll probably run out of cash in like 1 or 2 quarters based on this, then they're in a lot of trouble, because that means they need to either sell off shares at a super low stock price, which is unlikely, or they need to take on debt at higher interest rates in order to have money to fund their business. So the business itself, looking at the cash flow, I want to look at the free cash flow or the operating activities, was negative 22 million. So that's not actually too bad. So where did they spend all of this money? They spent it all in investing activities, $300 million in investing activities, and then $860 million in financing activities. So they need to let off the accelerator in investing. Their operating activities, though, so if they stop investing so much money, then they'll be fine, because they're only burning $22 million a quarter just from the business itself, which still leaves them with 370 over 20, basically. We'll call it 25 to be conservative. 15 quarters of cash flow left. So based on that, they still have like 4 years that they can survive, but They just need to slow down on their investing. What page is this? I'll link it. This is the statement of cash flows, consolidated statement of cash flows, unaudited. And this just shows you how much money they're spending in each category: operating expenses, so the business itself, investing activities, so if they take on any acquisitions or if they merge with another company, and then financing activities, like issuing shares of companies, so like selling off their shares. This can include, I think, employee stock-based compensation, but I'm not 100% sure on that. Yeah, let's see what else. And you can see what else is on here. Lease. Oh, Jesus Christ. That scared the crap out of me. So SPY just went above 380.4, so we might get a neutral to maybe a bullish day today. After that Michigan report came out, maybe we can close out of the put credit spread that I had opened for SPY now. Let me check out the Robinhood. So I'm assuming that it's going to stay above 376, which seems pretty certain at this point. Those trades are already up by $90. I opened them for 18. Currently, these trades are going for 10 cents each. Having trouble getting past the 370.4 mark, but we'll see if we do end up passing or not. It does kind of seem like we are going to break through. Yeah, I mean, if we go to halfway point at 380.74, that seems almost confirmed that we're going to stay above 380.4, but we'll see how this plays out. The call credit spreads I opened are down 140 at the moment. Let me scroll over so we can keep monitoring it more closely. And I'm assuming that it's going to stay below 381, so we're getting pretty close to this going south on us, but let's see. Yeah, I think I'm just going to cut my L. Jesus Christ, it's heading up quickly. 48 cents each? No. It's not worth 48 cents each. The most I'm going to give them is like 45. Markets are overreacting to that. So whenever a stock is at the short strike price that you open for a call credit spread or a put credit spread, it should be going for 40 cents. But right now this is going for 50. So I'm not willing to pay that much money to close it. It's not worth it yet. If it does end up going to 381.5, then yeah, then it's worth 50 cents each. But at the current moment, with it trading at 381.37, it's not worth 50 each. All right, it does look like it might hit that 381.5, but we'll see. That's a huge green candle. I wonder if there's any news that ended up sparking that. Jeez, that is just massive. Let's check out the put credit spreads. Those ought to be doing a lot better now. Put credit spreads are making us 130. These are going for 5 cents each now. I would be willing to close at 5 cents each. I will take my money and run. Goodbye. 10 at 5. See if that order goes through, hopefully. Fingers crossed. Robinhood, please. Nope. Here, let's try the old trick of saying Vlad's name 3 times quick. Vlad, Vlad, Vlad. Nope. Didn't work. Okay. Fine. Y'all can have my extra $10, I guess. Gotta love Robinhood. Always scheming for an extra $10. Oops. Well, looks like SPY just went back down from that level. Oh, that's annoying. Gotta love it. It's all right. Soon enough, I will be trading with E-Trade and won't have to deal with these crappy fills. But do I wait for expiration for spreads? No. With expiration dates, you either end up taking max profit or max loss. So being a binary event, I would not hold it into expiration. I would close it before expiration. And you also risk the stock being between your strike prices to where you run into what's known as pin risk, which you would either have to buy or sell 100 shares of the stock, which I don't have enough money to buy 100 shares of SPY. I ain't that rich yet, but yeah. Anyway, shit. Okay, I think I'm just going to open more because I think these are mispriced, honestly. I'm going to open 5 more of the call credit spreads because these are supposed to be going for 40 cents each, and right now they're going for 45. So I'm going to take advantage of that. I'll put on extra risk, obviously, for it, but I think the risk is worth it. All right, we got 230, so we open these at 45 each. Post this to the premium Discord. So add it to this position. Options alert. Premium 101. Freemium. Just opened 5 more SPY call credit spreads expiring today, 12/23 at 230 over 5, 46 each. Strike price is 381, 382. So, with them being mispriced, I think there's some more opportunity in this trade, but obviously this trade could go completely against me if SPY just keeps on, rallying for the rest of the day. Then I'll end up taking my max loss, but luckily the max loss isn't too bad. But yeah, I'm just waiting for these to be at a more reasonable price. They're currently going for 44 at the bid price. They should be going for 40. So we'll wait for that to play out for us. But I open total of 15 now at 33 cents each. Let me take a screenshot of that. $15 now at 33 each. Credit each, obviously. But yeah, I guess SPY is just keeping up on that 381 level, holding it for right now. Let's see if there's any economic news that's coming out that might be boosting the markets, pending on my close. Looks like Robinhood doesn't want to close. Yeah, Robinhood never wants to close your spreads. Never. Yeah, the bid ask on the 376, 375 is 5 and 7. I want to close this at like 5 or 6 cents a piece, and given that the ask is at 7, I'm not going to be able to do it until the ask is 6. But we'll see. We'll see how this plays out. Sometimes they're very quick. Usually not. Usually Robinhood is like the slowest fills that you can get. And you get what you pay for. And since you don't pay a commission with Robinhood, not good. 10:24. We got about 6 minutes till I head off. I might stay until 11 today. Looks like we got 14 likes here and 44 viewers. If we can get ourselves to 30 likes, then I'll stay until 11 o'clock. So an extra 30 minutes for y'all. Robinhood stealing from the poor. It's a pain when the bid ask is large and Robinhood makes you suffer. Yep. Every time. Thank you, Martin. We got 17. We need 30 if y'all want me to stay an extra 30 minutes today. 20 likes, 21. Let's check out SPY in the meantime while we wait for our likes. Yeah, so it looks like we're just catching a bid around 381.3. Kind of seems like we're going to go higher. But the bid ask on these put credit spreads is still 6 and 8. Ugh. I freaking hate Robinhood. All right, so we got 24 likes now. Need 6 more, and we'll continue. Hello, man. How do you find good small cap companies? That is a great question. Most small cap companies are a small cap company because they deserve to be so, because they don't make a lot of money or they don't have a lot of money. So in order to find a good small cap company, you want to look for a generally good company overall, which is a company right now that has positive free cash flow. So they're making money from their operating business. And you want a company that has a large cash pile already, right? So you want a company that's able to deploy their cash over the next few years as things start to get cheaper due to, the higher interest rates being a deflationary force, just like low interest rates were an inflationary force over the last 20 years. So you want a company with a lot of buying power, basically cash, and you want a company that's adding to their cash pile by being a profitable business, which is very hard to find in small cap companies. All right, looks like we have 26 likes, so if we get 4 more, I'll stay until 11. Can the NASDAQ get in the green today? That is a great question. QQQ is currently trading at 266.5. I think there's a decent chance that it might head up to that 270 or 267.6 level, which would put it slightly in the green today. But I don't know. It looks like SPY and Qs really isn't moving much off of 371.50, so it might have got a little bit ahead of itself, possibly. We'll see. Looks like it actually went all the way up to 381.75, but I don't know. Definitely looking bullish after that 10 a.m. report. Initially, there wasn't much of a reaction, but for some reason, we went up a crap ton at 10:15. I'm not really sure what led to that huge rally, but that's definitely going to be a support resistance level. Candle of significance, 379.64 at open, 379.64. It closed at 381.43. Divide that by 2, and you get 380.54. All right. So that's going to be your next support level down from where we're trading right now, 380.54. All right, and it looks like we just crossed 381.15, so we might be headed down for that level. We'll see how today plays out. It's a very interesting day. 29 likes. We just need 1 more for me to stay for 30 minutes. 30 likes for 30 minutes. A screener like Finviz would help with small caps. Yeah, probably. I'm not sure if Finviz will allow you to sort by free cash flow or operating cash flow. Let me see. Finviz.com. Screener exchange, so you can sort by market cap on here. Obviously, you want a small target price, index, dividend yield, average volume, IPO. I'm not seeing any. Oh, maybe it would be under fundamentals. So price to cash. Okay, that's an interesting read. Debt to equity is another interesting one, or a good one. Price to free cash flow is very important. That's what you want to see is price to free cash flow. Probably one of the most important metrics to sort by. So low is under 15, high is over 50. And you can obviously choose somewhere in between depending on what industry you're in. Some industries garner more high free cash flow than others, because some industries don't care so much about free cash flow. Like tech generally over the last couple of years didn't really care about free cash flow. But now with a more restrictive policy, financial policy, then cash flow becomes more important. So we need one more like. So we got 36 viewers, 29 likes. If we get one more, then I'll stay until 11. Otherwise, I'll be heading off now. All right, we got 2 likes. Thank you. So SPY is currently trading at 381.79. So it looks like we're going more positive for the day. I have a mark set at 382.42. So the call credit spreads that I open probably not doing the best, but we can close out of these put credit spreads now. Why does the ask always have to move as soon as I look at it? It's like Robinhood knows. It knows exactly when I look at it, and it's like, yep, we're going to change the price for you. Okay, let's see if I can close them at 5. Please close at 5. Nope. Robinhood, why do you got to do this to me? Why do y'all always have to screw me over? Limit order to close, SPY. Put credit spread, those expired today, 12/23 at 5 each. Strike prices were $375 and $376. Premium 101. Freemium. Failed. Put a check mark. And I originally opened those at, I think, 18 cents or something each. Let's see. Put credit spread, yeah. Originally opened at 18 each. So 18 minus 5, we opened 10. So we made a total of $130 profit, $130 profit for this trade. Sweet. But losing a lot more on the call credit spreads, I'm assuming. Yep, go figure. Currently going for 60. My original open was at 33. I opened 15. I think I'll try to close if we go above 382.41. Really no news that's sending the markets up. I guess the inflation coming in at expectations, plus the Michigan report inflation expectations coming down is a positive for the market. And we did fall like 2.7% yesterday, so maybe we get a bit of a rally out of SPY today. I wouldn't expect it to be too crazy. Kind of tempted to open another put credit spread at some higher strike prices, maybe assuming that will be above 380 today. I don't know, that seems pretty close, but let's see how much the credit is. If that trade would be worth it or not. Oh, it's actually paying an okay credit. I'm not totally against it. 19. Obviously, we're rallying a lot right now. So if we wait and SPY comes back down to, say, 381.15 or so, then we'll get a higher credit for this trade. Let me actually set an alert. Open PCS question mark. So that's a put credit spread is what PCS stands for. Not Metro PCS. But yeah, we're trading at 381.92. Went just above 382. But I'll probably close these call credit spreads if we go above 382.42. I think that would confirm us bullish today. But let's see. Markets are definitely going to be swinging all directions since it's a Friday. It always happens. How do I double like the video? Great question. Hi, Greg. Would you be able to do any summary on your day trading for the last 2 weeks? A lot of trades were open, and just wondering how you did. I haven't finished typing in all my trades over the last couple weeks because I've been moving my family in. But I could do that on Monday once I get around to. I put on all the opening trades, but I haven't gotten around to putting in all the closing trades to come up with a profit and loss. But I'll do that over the weekend, and I'll do that recap on Monday if you're here, Jean. And would you be able to recap some of your biggest winners and losers? Let's see. Biggest losers that I can think of, usually on Friday, so probably last Friday, if I had to guess. Let me head on over to the chat. I can look for specific dates, so I can look for Friday of last week. And I can search for in Greg's trades. So let's see. Oh, I almost forgot to buy QQQX today. We'll need to do that before I leave. Open 212, $402 loss that I took last Friday. I don't think that's the biggest loss that I took. I think earnings were some of my biggest losers, but let me double check. Yeah, $402 loss for Adobe. I didn't trade SPY that day, interesting enough. But yeah, usually Fridays is the days that I lose the most. I usually try to size down on Fridays accordingly, just because the markets are always so volatile. And volatility is good for debit spreads usually, just because if you choose a direction right, it'll be that much more profitable. But I like to trade a lot of credit spreads, so maybe on Fridays I can trade debit spreads instead of credit spreads, and that might make me more profitable. Like today, maybe I'd open a debit spread assuming that we're going to go to 383 and above and recover all the losses from this morning. Possibly that could actually be a decent trade, but I wouldn't spend a lot of money on it. Let's see how much that trade is actually going for. So if we assume that it's going to be above 383, we're paying how much to open that trade? It's like 47 each. And that the risk reward ratio on that is not ideal. You'd want to close that for like 60 each, and right now they're going for 48. So there's only about 25% profit in it. It's not a bad trade. It's just not usually the risk reward. Oh, we hit that 382.40 mark, so it looks like I might need to close out of the call credit spreads now. Let's see if we actually cross above. Yeah, kind of looks like it. And my assumption is that we will be below 381, so might happen later in the day, probably around like 2 p.m. or after, and then Robinhood's going to start closing the trades at 3:30, so that's a bit annoying unless we end up topping right here. But let's see. The next daily top was, or the last daily top was 382.95 ish. Yeah. So that's the daily high to look out for the upside. But we have three pretty decent candles in the last hour. It's just been a rip since 10 a.m. Basically all green candles but one. So markets are definitely liking the data that they're seeing this morning, it seems like, because there's no other economic news that's coming out. Let's see, investing.com, crypto news, latest, most popular. Oil rises after Russia said that it could cut output due to price caps. Wall Street tumbles on rate, recession worries, bleak chipmaker outlook. what happened in 2022. So not really much news other than the economic data that came out this morning. But yeah, it looks like we might have finally topped out. Hopefully we come back down below 381.15, but seems pretty unlikely, at least for right now, unless we end up reversing this trend. Let's see. And I might look to open a call debit spread, a very cheap call debit spread, if we go back to 381.79 ish. It's a good support. Oops. Well, what the heck happened to it? Yeah. Good support and resistance from the high on this candle and the low of this candle. 381.8 basically. Could open a put credit spread, assuming that we're going to stay above, and that'll allow us to make money if the stock market keeps going up. But given how much it's rallied already in the last 40 minutes, it does seem pretty unlikely that that would be the case. I would think that we would give up that 381.8 mark, but obviously I do have some bias for the downside given the call credit spread that I have open. Let's see, though. If we assume that SPY is going to stay above 381, you're cutting it close with the strike price being only $1.20 below, and the credit's not all that either. That's not a trade that I'd be willing to take. Maybe if it was paying like 30 cents each, but right now it's only paying 27, so maybe if it hits 30 I'll open, but looks like we're coming back down to the open of this candle at 382.14, just crossed below it, so we might start to give up some of the rally that we had over the last 15 minutes. All right. Okay. So we came below the close and open of these two candles. So might be testing 381.8. Those put credit spreads are still only paying 28 cents. I don't think they're worth opening until it hits 30, but even if it hits 30, I think that they should be going for more. They should already be going for 30 since it's only trading $1 away, and we still have how many hours until market close today? Do we have a full trading day today? Let me double check that actually. I think it's a full trading day. I don't think that we have a half day like we would if today was Christmas Eve. But let me just double check. Is the stock market open today? 9 a.m., 9:30 to 4. Today's the 23rd. Bond markets will shut off at 2 p.m. Doesn't say anything about the stock market. So I'm assuming we're going to close at 4, but just want to make 100% sure. Yeah. Seems like it. Gonna be all day. Alright. So now those put credit spreads are paying us 28 cents. So they're getting close to the 30 cents that I want, but they're not there just yet. Okay, now they're paying 29. Now they're paying 30, 31. So that's might start to become worth it. 0.3. I wouldn't risk a lot on this. Again, I don't usually end up losing money on Fridays. Just because of the price action is so volatile. But let's see. Oh, it already bounced. God dang it. All right. I'm going to try to open those at 29 each. So I'm assuming we're going to stay above 381. And I guess this will be a hedge against my call credit spread too, to some degree. Smaller position than my call credit spread is, but still a hedge. All right. So new options alert, posting in the trade chat. Just opened a new SPY put credit spread. That one expires today, 12/23 at 29 each. Okay. All right. Oops. So this will be a hedge for the put credit spread if we keep rallying for the rest of the day, but it does seem like we might have got a reversal here. So hopefully we can make some more money on the call credit spread if that ends up coming back below that 381 price target. All right, we just broke through 381.8. Still some support at 381.4, and then 381.15, 380.54, and then probably around 379-ish. So hopefully markets keep on pulling back for the call credit spread. Let's see, the call credit spread going for 52 cents a piece. So now the prices are actually reflecting about what it should be. So now we might be able to close them at 40 and cut our losses, but it seems like we're headed down pretty quick, down to that 381.15 level. And if we crack that, I would imagine we're probably going to give up most of the gains that we made over the last 45 minutes, but we'll see how this all shakes out. This is how the market makers love to play it. They like to send stocks up violently and then send stocks down violently, especially on Fridays, given how many options are expiring. Basically, what they're trying to do is they're trying to pull as much money out of the market as they can. That way, they don't have to buy and sell the 100 shares on assignment of selling all these calls and put options to everybody that has a Friday expiration date. Market makers love to play around on Fridays. They have a freaking field day all the time. In USA, do you see BYD cars over here? No, I haven't seen any. I have seen a couple Rivians around where I'm living. I've seen like 2, maybe 3 Lucid Motors, and then a crap ton of Teslas, obviously, being the most popular. But yeah, for the most part, I see Teslas, Rivians, Lucids, Mach-E's by Ford are pretty popular, and then the Porsche Taycan is pretty popular. I live around a bunch of rich people, I guess, being in Pittsburgh and being at a kind of medicine hub, essentially, is what Pittsburgh is. A lot of rich doctors that have very nice vehicles. But yeah. Let's see. SPY's trading at 381.48. So might be finally chilling out. Again, there's a support around 381.4. I'll just keep my cursor there. I don't want to draw up another line and make my charts look like a cheese grater. But oh, we just crossed below 381.15. All right. So RIP to all the people that bought calls whenever the market started going up. And RIP to my put credit spread that I opened when SPY was trading around here. Did I do an iron condor on SPY? Yeah, basically. So I opened a call credit spread and a put credit spread, but I did it separately. Bruh, how is this still going for 45 cents each? This should be going for 40. Oh, they need to stop playing. Oh, I hate this so much. I hate this. Okay, no, they're actually going for 43 cents. So they're going for around the same price that they should be going for. They actually should be going for 40, and they're going for 40. Well, now they're going for 40 at the bid. But let's see. Yeah, it looks like we're definitely dragging. Let's see if we can set a price alert with this 380.54 level. And that's a candle of significance price level from this huge candle that really came out of nowhere. There was no news at 10:15, but that was the biggest candle that we've seen so far today, even being bigger than the red candle that we had at 9:35. It's just the market makers pulling the strings. Like MC says, this Friday, market makers are out to get everybody. They're going to try to destroy your puts, your calls, and everything in between. They want to make as much money as they can. It's Friday. They got to get their paycheck. I wonder how many options are actually expiring today. It's a good question. How many options expiring today? Is that a thing we can search? It should be, right? It's December 23rd. Nope. We have the calendar. The calendar doesn't give us any information, though. Futures options? No, we don't want futures. We want regular options. Surely there's somewhere to find how many options are expiring in one day. I guess we can go to, what is it called? MaximumPain.com. So this will show you the open interest. / I think ticker / SPY. Oh, that's not the right. SPY. Today's expiration. Wait a minute. Yeah, today's expiration. So we have open interest. The pain point is at 382.50. So that's where market makers can inflict the most amount of damage, basically. If they end the market at 382.50, that's where people have the most amount of both call options and put options open. But I wish that it had like the total amount of open interest You can add it up here. We could do like a CSV file and add that, but that's a lot of work. It's a lot of options expiring in the 370s and a lot expiring at 380. These puts or calls? Let's see. Yeah, these are the puts. And then let's see, the calls, I would imagine 380 is also pretty popular just because it's a round number. 27,000 options expiring, call options expiring with the 380 strike price. And then if we look at the 382.50, there's 8,100 and 12,000, so about 20,000 total. So really the market should be aiming for around 380 if I had to guess. Yeah, let's see. If they want to have the most options losing money. But right now it's trading at 381.24. Ended up bouncing at around 381.15. Right between the 381.15 mark and the 380.54. Basically in the middle of that was another support level for it. But let's see what else we got. All right. Well, looking at the put credit spreads, these are down to 40 cents each, or they're up to 40 cents each when I originally opened it at 29. I think I'll probably just hold them later into the day, just given how volatile the markets are likely to be. If I had to guess, though, we might head down to that 380 level. Just based on the open interest for that 380 strike price, I think we might head that way sometime by the end of the day. So maybe I'll open small put credit spread or put debit spread, assuming we're going to head there. And that'll be the last trade I make for today. It looks like actually I can't do that because I have the put credit spread to open with the same strike prices, but maybe we can assume that it'll go down to 379. We pay 30 cents each. We can close them at 40 cents once it hits 380, which will be about a 30% profit. This one I'd probably only be willing to put down like 300. So sizing down my trade since it's a Friday, but 2.8. All right. And that'll be my last trade. Put debit spread, assuming that we're going to head to that 380 price level, just because there's a lot of open interest for it. New options alert. Premium 1F. Just opened a 380, 379. SPY put debit spread. Jesus Christ, I can't type. Expiring today, 12. 23 at how much each? 30 each. And I want to close those if SPY hits 380, which will put them at about 40 cents a pop. But yeah, it looks like we're giving up all that rally that we had. And I'll set a new alert for if we go to 380 instead of this 380.54 level because we're already there. So let me replace the alert. I can't replace it since it's with a price level. But create an alert at or below 380. All right. Cool stuff. So that's all the trades I'll make today. So you got the call credit spread. This one expired. They all expire today, I guess. Assuming that we're going to stay under 381. Currently, we're trading at 380.8. I think there's a decent chance we head down to that 380 price level, like I said, and they should be going for around 30 cents a piece at that point. We opened them at 33, so not a lot of profit margin for that trade, if that is the case. But then I opened the put debit spread, assuming that we're going to head to 382 or $380. And I would plan to close these at 40 cents a piece. Right now they're trading at 31, so still a decent profit margin that you can make on it. And then I had the put credit spreads, assuming that we're going to stay above 381, just given the volatility we're likely to see with the markets today, with the market makers swinging around. Since it's Friday, this one could be profitable too, but I think this is probably the least likely of the 3 trades that I have open for SPY. The magic of the algorithms. Absolutely. Will CEOs get bonuses with stocks still down 60 to 99%? There's been, funnily enough, they've been asking shareholders if CEOs should get bonuses, and obviously, like, the shareholders are saying no. So if it's put up to a company, or if it's put up to a share vote, then probably not. I think it was like Jamie Dimon asked for a bonus, and he got rejected by his shareholders. Is that good money? The put debit spread, yeah, I think it's pretty decent money. But yeah, it's 11:01, so hopefully I'll catch y'all in the Discord. It's pinned in the comments, and if not, I'll catch y'all at 9:30 in the morning on Tuesday, because the markets are going to be closed on Monday and observing Christmas. So see y'all Tuesday. Bye, everybody.